سلام بچه، خوش آمدید در چینل حسین 5000. امیدوارم که جور و صحتمند باشین و امروز ما سعی میکنیم که یک چند تا کلمات جدید را با گوش دادن با اخبار با هم یاد بگیریم و سعی کنید که کانال ما را سابسکرایب کنید تا ویدیوهای بعدی ما را هم از دست ندهین. combination underneath rates sudden cyclical approach dividend observation bizarre
Let's talk a little bit about the weird dynamic with the markets this week. Beginning of the week, everybody thought Delta variant was going to shut things down again. You saw the markets down significantly, but we've kind of taken off since then and not turned back. What are you watching right now? Is it earnings? Is it the Fed? Is it the Delta variant? What do you think?
Becky, I think it's a combination of all three. If you look at earnings, they've been very strong. I mean, a majority of companies have beat earnings expectations going forward. If you look at the Fed, the market really is moving underneath the big market in terms of where interest rates go. So when the 10-year goes to 1.2, you see the stay-at-home stocks do well. Now when it goes up to 1.3 or higher, then all of a sudden we get the value cyclicals. Our view on this is stick with really good companies that are growing through this, have the barbell approach where we got the value cyclical side with the financials. I mean, if you look at financials, they're trading at the XLF is 10% off its high. And you got companies like Morgan Stanley that had blowout earnings. They double their dividend, they're buying back shares, and their earnings are going to grow high single digits, if not double digits. Then you look at Blackstone today, and you had the COO on. Fantastic earnings, and these stocks are all growing even though we have this uncertainty out there. But the big headwind right now is, when do we get through kind of the next stage of this variant? And I think the market in the short term can be quite volatile, and for us that's opportunities. It's opportunities on Monday, and if the market pulls back 5-10% to really get back in with new capital on the side.
It's really strange to hear you say, and you're right, it's just an observation, but at 1.2 on the 10-year, everybody wants the stay-at-home stocks. At 1.3, forget it. We want the cyclicals, so get back out of it. I mean, that's bizarre to have so many sectors in the market kind of trapped by a 0.1% move in the 10-year.
It really is, and when it was going down to closer to 1%, I mean, any stock that was interest rate sensitive was just getting killed. And if you think rates do go up to 1.5 to maybe close to 2 over the next year, some of these stocks on the value cyclical side are really cheap. And if you do buy them now and you can bear with the volatility, I think you'll do fine. And so some of the companies that we're looking at in addition, like a Comcast, which is the parent of your company, or even an Uber, which could do very well come the fall once we get through the variant. Uber's down almost 30% off its peak. So underneath the S&P, which is at a close time, all-time high, there are plenty of opportunities there. You just have to be patient. And I think, if you hold good companies with secular growth, investors will do well.